All right, exam aspirants. Let's talk about a big one, the IFSCA Act of 2019. You've probably seen it on your syllabus, and it can look, well, a little intimidating. But what is it really all about? Today, we're going to break it down piece by piece so you have exactly what you need to master this topic. Let's dive right in.
Okay, here's our game plan. We're going to start with the basics, the key definitions. Then we'll get into the real meat of it, who makes up the authority and what powers they have. We'll touch on the money and accountability side of things, check out some important details, and finish strong with a super focused summary of everything you need for the exam.
Okay, let's kick things off. To really get why this act is such a game changer, we first have to understand what things were like before. We're building the foundation here.
So, picture this. Before this act, if you were a financial institution trying to operate in an IFSC, it was complicated. You had to deal with a whole bunch of different regulators all at once. You had the RBI for banking, SEBI for securities, IRDAI for insurance, PFRDA for pensions. I mean, you get the picture, right? It was a fragmented system and honestly, a bit of a headache.
So what exactly is an International Financial Services Center, or IFSC? Well, the easiest way to think about it is as a special financial zone. It's basically a designated area like Gift City that's set up to provide financial services to clients who are outside the regular Indian economy. It's all about dealing in foreign currencies and serving global customers.
And this is where our main character enters the stage, the authority. The whole point of this act was to create this one single body, the International Financial Services Centers Authority, or IFSCA. Its job? To be the one and only, the unified regulator for all financial services, products, and institutions inside an IFSC. One regulator to rule them all, so to speak.
Okay, this is super important for your exam, so listen up. What does the FISCA actually regulate? Well, the Act calls them financial products. This covers a pretty wide range of things: securities, insurance contracts, deposits, credit arrangements, foreign currency deals, and, this is the key part, any other product the central government decides to add to the list later on. So, it's a flexible definition.
All right, moving on. We know why the IFSCA was created, but who's actually running the show? Let's take a look at the composition and structure of the authority itself. Now, this is a classic exam question right here, so you'll want to remember this. The authority is made up of 9 members in total. We've got one chairperson at the top. Then, there's one member nominated from each of the big 4 regulators. That's RBI, SEBI, IRDAI, and PFRDA. Add to that 2 members from the Ministry of Finance, and finally, 2 other members are appointed based on their expertise.
You know what? There's a super easy way to remember this for your exam. Just think of the mnemonic C422. It's that simple. C for the chairperson, 4 for the 4 big regulators, 2 for the finance ministry folks, and the final 2 for the other expert members. C422. It's a great way to remember that mix of regulatory and government know-how.
Okay, let's talk about some numbers you absolutely have to know. These are the kind of facts that just love to show up on tests. First, the term of office for the chairperson and members is 3 years. Got it? 3 years. Now for age limits. The chairperson has to hang up their boots at 65. For other members, the age limit is 62. So remember those key figures: 3 years, 65, and 62. Okay, so we've met the team. Now for the most critical part of this whole thing. What can the IFSCA actually do? What are its powers and functions? This is really the heart of the entire act.
And this is the big transformation we've been talking about. Before the act, you had this complex web of multiple regulators. It could be confusing and slow. After the act, you have one single unified regulator, the IFSCA. It acts as a single window clearance. Think of it as a one-stop shop. For any financial institution in an IFSC, this is a massive deal. It means less running around, less confusion, and a much smoother process.
So, you might be wondering, how does it actually get all these powers? Well, the magic is in Section 13 and what's called the First Schedule of the Act. This is where the IFSCA gets its authority to, well, wear many hats. It's empowered to exercise all the powers that RBI, SEBI, IRDA, and PFRDA would normally have, but, and this is a big but, only within the geographical limits of an IFSC. Okay, when you give one single body that much power, you have to make sure there are checks and balances, right? Absolutely.
So how does the Act make sure the IFSCA is held accountable? Let's dig into the finance and audit side of things.
The Act sets up a really clear accountability loop. It's a three-step process. First, the Comptroller and Auditor General of India, the CAG, comes in and audits the authority's books. No hiding anything. Step 2, that audit report gets sent over to the central government. And finally, Step 3, the government has to present that report to both houses of Parliament. It's all out in the open, which ensures total transparency.
All right, now let's get into some of the miscellaneous provisions. These might seem like small details, but trust me, this is exactly the kind of stuff that pops up in exams. This is the fine print you really need to know.
Okay, this is a big one. Section 30. This gives the IFSCA Act what's called an overriding effect. What does that mean? It's simple. If there's ever a conflict between this act and another law, within the boundaries of an IFSC, this act wins. It's the supreme law of the land for that specific financial zone.
Here's another key number for you to file away: 6 months. Under very specific circumstances, the central government can actually step in and take over the authority. But, and this is important, they can only do it for a maximum of 6 months. After that, the authority has to be put back in place, so it's a temporary emergency power.
Whew, we've covered a ton of information. So let's pull it all together now. Think of this next section as your ultimate cheat sheet for the exam. These are the absolute key takeaways you need to have locked in.
First up, the core concepts. What's the main purpose? To create a unified authority, the IFSCA, for India's international financial services centers. What problem did it fix? It got rid of that messy multi-regulator system and created a single-window regulator. And remember, this whole thing only applies to IFSCs set up under the Special Economic Zones Act, and that special overriding effect from Section 30 makes sure it's the top dog in its own territory. Next, let's talk about the authority itself. It's a 9-member body, and don't forget your mnemonic, C422. What's its biggest power? It gets to act as RBI, SEBI, IRDAI, and PFRDA all rolled into one, but only inside the IFSC. And finally, its head office is located wherever the central government says it is.
And last but not least, let's hammer home those facts and figures. Term of office, 3 years. Age limits, 65 for the chairperson, 62 for a full-time member. The government can only take over for a maximum of 6 months. A crucial rule, all transactions in IFSC have to be in a foreign currency. And who keeps them in check? The CAG audits them, and the report goes to Parliament. Seriously, these are pure gold for objective-type questions.
So, when you step back and look at the big picture, this act is more than just a piece of legislation. It's really a foundational step for India's ambitions on the global financial stage. And that leaves us with a pretty exciting question, doesn't it? With this powerful, unified system in place, what kind of new financial innovations will India now be able to unlock?
And that's our deep dive into the IFSCA Act of 2019. We really hope breaking it down like this helps you feel more confident heading into your exams. If you found this explainer helpful, do us a favor and hit that like button, share it with fellow aspirants, and of course, subscribe to the channel for more content just like this. All the best with your preparation.